Professional traders like setups like this, where the price is trending in one direction. They wait for the signals on the weakness of the trend, but to make sure that they are right, they wait for a pullback before entering a trade and making a huge profit. They usually focus on price action trading concepts, but in this video, I want to introduce a new indicator on TradingView that gives you a similar signal. Just make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, to add this amazing indicator to our chart, here we click on indicators and we search HEMA trend levels, this one, which is a new indicator from Algo Alpha. Alright, this is the indicator, and as you can see, it is overlaid on the price chart. This indicator has used two Hull Exponential Moving Averages to create this dynamic band that changes color between red and green on the price chart. Hull Moving Average was developed by Alan Hull, and it's a kind of moving average that can provide a smoother trend line with less lag in comparison to simple moving average or exponential moving average. It uses a complex calculations based on weighted moving averages to create a valuable moving average like this, which is very popular among traders. If we go to the settings of the indicator, here for the two Hull Exponential Moving Averages, you can see that for the faster one, the length is set at 20, and for the slower one, the length is set at 40. Depending on what kinds of movements you want to catch in the market, you need to change these settings. The default settings are suitable for catching short-term trends on the chart, but if you want to focus on longer-term trends, you need to increase the length here. The higher the length, the longer term trend you are dealing with. We continue with the default settings because we want to focus on short-term trend changes that are happening on the chart. So here, this band is built based on Hull Exponential Moving Averages with length of 20 and 40. When the faster moving average crosses above the slower moving average, we get a green label like this, and the color of the band also becomes green. And when the fast moving average crosses below the slow moving average, we get a red label like this, and the color of the band becomes red. So when we get a green label and the band becomes green, it is a signal that the price is advancing and turning to an uptrend. And when we get a red label and the band becomes red, it's a signal the price is declining and turning to a downtrend. At the point that we have a green label, when the candle is closed and the label is printed on the price chart, the indicator adds a horizontal green zone which will act as a support level, and at the point that we get a red label when this candle is closed and a red label is printed like this, the indicator adds a horizontal zone like this. The color is red, and this will act as a resistance level. When the price retests these red or green horizontal levels, the indicator shows the signal by the help of these green and red triangles. Alright, let me teach you how you can trade based on this indicator. I'm gonna use a mix of this indicator with a price action concept for more confirmation. So we will not enter a trade only based on these red or green labels or the retest signals, but I will teach you a price action method for more confirmation. By the way, if you're interested to completely learn price action trading, recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you want to master price action analysis. Alright, getting back to the indicator, when we have a green label like this, it's a signal that probably the price is turning to an uptrend, but to make sure with higher probability that the price is really reversing to an uptrend, we wait for a pullback or retest of this green zone, which the indicator added when we got this green label. As I explained earlier, the indicator also shows the retest of this green zone by the help of these triangles. They are actually based on rejection of the price from the zone. You can see that after the green label, we got rejection of the price here, and then here, and another one here. In this trading strategy, we want creation of a swing high where the price reaches to the zone, not just one candle retest very close to the zone, but we want creation of a sewing high like this, where we can identify a distance between the price and the zone. In the next step, we mark the highest close of the sewing high, or if you want to take a conservative approach, you can mark the highest high of the sewing high, which is at this level, and then you should wait until a candle is closed above this level. When we get a candle closed above this high, the buy signal is confirmed and we can enter a long position at this point when the new candle is opened. The stop loss below the previous sewing low, below the pullback, and profit target at 1.5 risk to reward ratio. On the other hand, when we get a red label like this, which is a signal for a downtrend, we should wait for a pullback to this red zone, which actually acts as a resistance level. As I explained earlier, when the indicator gives a red label like this, when the candle is closed and this label is printed on the price chart, the indicator also adds a horizontal zone like this that can act as a resistance level, and this can help us to find trading opportunities in the pullbacks. And as I explained earlier, the indicator also shows rejection of the price after retesting the zone by the help of these red triangles. After the red label, we want a pullback that creates a sewing low. We don't take action on retest signals like this. We want a pullback to the zone that makes a sewing low like this. There is a distance between price and the zone. In the next step, we mark the closing price of this sewing low and we wait for a candle to be closed below this level. So here the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the previous sewing high, above the pullback, and profit target at 1.5 risk to reward ratio. As I mentioned at the beginning of the video, this trading method is usually practiced by professionals purely based on price action concepts, but this indicator is a great help to execute this trading strategy when it is mixed with a price action concept. Please pay attention that this indicator or this trading strategy is not a 100% win rate trading strategy. There is no trading strategy with guaranteed signals, and the result of every single trade that you open can be a losing position. Trading is a game of probabilities, and we just try to enter in positions that have higher probability, so you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. By the help of this risk management strategy, based on your decided stop loss level, your position size is calculated in a way that you will only lose 1% of your trading account in case if the price hits your stop loss. For example, if you have a $1,000 trading account, you will only lose $10 if the price hits your stop loss, which is 1% of your trading account. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.